Hello and welcome back. This is BloombergQuint at the Morgan Stanley Annual Indian Summit. I am now in conversation with Baisiwala, and he looks at real estate as well as the Indian healthcare space for Morgan Stanley. Samir, thank you for joining us.
It's a pleasure.
Samir, let me start off with the Indian pharmaceutical sector and the kind of challenges it is facing in the United States, especially the larger companies which have substantial exposure to the United States. Are these problems here to stay, and if they are, how long will it take for these problems to subside?
Well, I think it's a mix of things, which is sector specific and as well as company idiosyncratic.
Right.
I think that's what's creating the pain point right now. As far as the industry issues are concerned, it's a consolidation of customers.
Yes.
It is leading to pricing pressure. It's because of GDUFA by FDA, which means greater number of approvals per product, which is adding to competitive pressures. And third is FDA's a higher bar for everyone to meet on CGMP issues.
Right.
I think it's a combination of these three which people are getting hit at some level or the other.
Right.
The second thing, which is really company specific, and to my mind, I think that's a more profound one, even though people blame more on the sector issues, and that's about companies having a lot of supernormal profits coming from 2 or 3 key products.
Right.
So as time goes by, some of them are going to come off of their peak, and that's a pressure that's happening. And second issue is that to make up for that, this is nothing new. This is happening for 5-10 years. But every time something came off, there are 2 or 3 new approvals which used to make up for it, and yet have the business grow. And that's missing. And that's because some of the flagship facilities are shut down for new approvals.
Yes.
So the combination of these two factors, which is really creating the pressure points.
So, Samir, if I consider just some of the larger players, how long do you think can resolution come in with respect to some of these problems and challenges that you've just spoken about?
So I think there's no easy answer, and I said there are 3 or 5 issues.
Right.
So it depends where each company is in these issues. So,
yes.
But I think the overwhelming point would be getting the facilities fall back in compliance,
right. Yes.
And the new approvals come back in a big measure. So I think that really is the key driver. You just saw 1 or 2 companies recently which got remediated and approval cycle started back up again.
Right.
So when would this happen? I would say give them 6 months to 18 months, and I think we should see increasingly more and more companies coming out of that mess.
Right. Samir, you've also initiated some certain calls in the hospital sector, and I know you're not at the liberty to speak about stocks specifically, but what do you see when it comes to the sector?
Well, hospitals is a great place to be in, if you ask me. This is a sector where the country has been underinvested for many, many decades now. So I think it's a good place to be in. I see a really multi-year growth prospects, and the rule of thumb is that if the GDP nominal growth of whatever 10%, 12%, healthcare services is going to grow faster than that. So it could be 1.5 times or 1.8 times where India is in its economic evolution.
Right.
I see no different story to play out for Indian hospital segment either. That's one. Second, I would say the sector is coming off, taking it more in the near term. 3 years of intense capex cycle,
yes,
within which they've added substantial new capacities, the bed capacities, new assets,
yes,
and they're running at very low occupancy levels. So we are going to see a very nice ramp up as we go forward. Balance sheets will get a lot better because we are at the end of the capex cycle.
Right.
So balance sheets get better, cash flows improve, occupancies go up. And I think there's a reason to be optimistic about this sector from a 2-year, 3-year perspective.
And again, you are very positive about diagnostics in India.
Well, we like the space. It's not too different on the growth criteria.
Yes.
Because it's for healthcare services, which includes diagnostics on the same formula.
Yes.
But having said that, we think there's some near-term challenges because looking at the success of a couple of these companies, a lot of regional players have been emerging. They're all backed by private equity players. So the regional competitive intensity is on the rise. So the players who are trying earlier aspirational to go regional to national will find more challenges. So they'll challenge in terms of volumes, they'll challenge in terms of the ability to take up prices. So we think the company are already moderating the growth outlook. And so I think we need to be a little careful here. But longer term story is good. but near term I think it will be a little bit more challenging.
Okay. So I'm going to shift focus to the realty sector right now, and we've had some of the industry heads suggest that when it comes to realty developers, there's going to be a lot of consolidation, and about a good 80 to 90% of the existing players are going to have to move out of the industry. Do you hold that view? Are you expecting as much consolidation?
Well, let's put it this way, that some of the recent regulations like RERA is going to consolidate the industry.
Right.
90-10, I'm not too sure. To my mind, it's actually very, very unlikely.
Right.
So it's a long-term process, and there will be some consolidation along the way.
Yes.
The basic thing here is that the process to do work is going to be a lot more difficult. It's going to be a lot more sophisticated.
Right.
It's going to be a lot more costlier. Not everyone can adhere to that.
Right.
So your practices have to really transform itself. So RERA really puts you in a first world compliance
Yes.
requirement.
Yes.
And that everyone can't do that.
Right.
So I think it's a good move, it's a big move, and it would benefit customers, it would benefit good developers.
Right.
And we'll see how it goes.
Okay. So it comes then what comes down to the report that you wrote some time ago, and you said in that report that China serves as a certain template for India. As what China was in 2015 is very similar to what China was in 2003.
Exactly.
Can you elaborate a little more on that?
So we compared a lot of macroeconomic variables, and whether it's per capita income,
Right.
where we are today is $1,500, $1,600.
Yes.
Whether we are in terms of level of urbanization,
Right.
so roughly about 30, 70 or 33, 67.
Right.
In terms of our population, in terms of our affordability, in terms of where our interest rates are. So we saw a lot of parallels in terms of demographic, which is age, 27-year median, versus where China is mid-30s.
Right.
So and these are, as you can make out, all of them are really the drivers of demand for property sector. And therefore we thought that what are similarities and dissimilarities,
Yes.
and therefore where India can be in 5 years and 10 years from now. So outlook is going to be a lot more volume game,
Yes.
versus last 5 years, which was a lot more pricing game.
Okay.
Or actually last 10 years, I would say. So,
Right.
So I think it's going to, people who can churn out better volumes are going to be the winners as we go forward, and that takes some part from the Chinese evolution.
Right. And finally, speaking about volumes and your outlook, can you tell us what you're expecting when it comes to the realty market in India for 2020 and 2025?
So right now, I would say the size of the Indian market is about $100 billion. I think it's fair to assume that this can grow at early to mid-teens
Right.
over the next 5-year period, and they should accelerate to mid-teen plus from 2021 to 2025. I would just stop here to make one more point, that once you go from 2025 to 2035,
Yes.
assuming stability in the society, in macroeconomics, in politics, and the pro-development agenda continues,
Yes.
I think it's going to even accelerate further in that time. So,
Okay. Well, Samir, it was a pleasure speaking with you. Thank you very much for your time.
sure, same here.
Thank you.